it is estimated that another 40 million buyers could be credit eligible to purchase a home based on switching from the old FICO system to the VantageScore. You're telling me I can't have a mortgage at this amount. It doesn't make sense to me because of the underwriting guidelines and credit guidelines. It could be the difference between you getting approved and not being approved. Major changes to credit and how it could affect your home buying process on this episode of Major Money Matters. Welcome back to another episode of Major Money Matters. Breaking news as it pertains to credit and how it could affect your home buying process, especially for those people who might have been turned down or turned away for credit situations. We hear this phrase all the time of people saying, well, I've been paying rent for 3 years at this amount. You're telling me I can't have a mortgage at this amount. It doesn't make sense to me because of the underwriting guidelines and credit guidelines and stuff like that. So there have been just a major change to how things may look on the credit reporting side. And I'm not a credit expert. Okay. So I do mortgages. Some people will argue that I'm pretty good at it, but I don't do credit advice, credit restoration. Not my thing. I am not a jack of all trades. I am very good, or I attempt to be very good at one particular thing. So I wanted to bring in my good friend Jesse from My Credit Guy for us to have a conversation. First of all, Jesse, how you doing, brother?
Doing really good, man. Exciting
awesome
time.
Awesome. Well, thanks for agreeing to come on and have this conversation. Before we get into the details of what has changed, Jesse, can we talk about what you do at My Credit Guy, what the company does? Tell us about My Credit Guy.
Yeah, thanks, Major. So My Credit Guy was a business that was started 10 years ago by Sam and Trisha Parker, the co-founders, their husband and wife. And their intentions were to be different in our industry of credit repair, right? So for you as a loan officer in the time that you've been in it, when you hear credit repair, obviously before you met us, it's kind of got a negative connotation to it, right? Like there's just a lot of people that don't do what they say that they're going to do in this space, right? So one of the very specific intentions that Sam and Trisha had were that they wanted to be different. They wanted to be that company that was actually going to follow through with what they said they were going to do and help people specifically get access to a home loan. I'm very passionate about that. So we are a credit restoration company that partners mainly with loan officers and real estate agents to help their clients that are not quite credit ready, either because they have an established credit or they need to work to improve some things that have happened in the past with that goal of home ownership.
Hey, amazing. And you guys do an amazing job. And I'm specifically, some of my buyers are directly attributed to your efforts. And so I thank you for the work that you guys put in, for being a great partner, being a great company, somebody we can feel reliable in sending somebody to for credit help. So thank you very much for that. Now, let's get to the business at hand. And in order to understand this change, okay, Jesse, we first have to identify the problem. Okay, so let's talk about the issue with our current credit score model and what this new directive from Mr. Pulte, who's the head of the FHFA, appointed by the president to over all of housing. Okay, so let's talk about what the change is and the problem that it seeks to solve.
Yeah, so really the issue at hand, and it's been this way for a while. This is an initiative that's been in play for years now, is that the credit scoring models, specifically the scoring system, right, is from the late 90s, early 2000s, right? I mean, we're talking 20 plus years ago. And when you think about how life as an American has changed in that 20 years from a technology standpoint as it relates to the way of life, 20 years there's a lot that's happened, right? And so what we have is we have these gaps, right, of opportunities to create what would be considered opportunities to be, establish credit worthiness, right? So for example, today, when you think about your budget and the things that you pay consistently, you think about, your water bill, your cell phone bill, your electricity bill, your rent, those payments that you're consistently making that would lend towards the opportunity for you to prove that you're a credible borrower, they're not being accounted for in the current credit scoring models, right? And it's been that way for a long time. So as you mentioned earlier, it's something that I hear often. I'm in a situation where I've consistently paid rent for my residence, right? The place that I lay my head. I've been paying, say, $2,000 every single month, consistently on time. I'm paying a mortgage. I'm just not paying mine, right? And in that situation, even though that responsibility has been, played out effectively, it's not being accounted for as it relates to the potential to buy a home. And we're tackling.
I've heard people. We often refer to this, really honestly, we refer to it as the credit game, because really, in some situations, it is a game, because you can be. There are certain rules to credit. If you pay off your credit card on this date versus this date, it always shows the balance on your credit card. Really, you're not carrying over. It becomes this convoluted thing of you have to keep your numbers below this amount. It's the credit game, as we refer to it. And in many cases, those people who have higher FICO scores, 790, 800, 810, 820 FICO scores, they're good with money, but they also understand the game, because you can be good with money and not understand the game and be at a 704 because you just don't understand how the game works.
You nailed it, right? And then the other thing that you can overlay is that if you have not been in a situation where not only just like managing money was not something that was talked about when you grew up or something you've been exposed to through your community, your friends, you add the layer of credit, and it's kind of a double-edged sword, right? So there's so much that we do that's based on education, right?
Yeah.
So it's not just here, fix this, but like we're trying to mold behaviors and understanding so that people can get what they deserve, right? Through, the opportunity to move in the right direction.
And this is why I enjoy my credit guide and team, because you guys, at your core, you understand the challenges of credit, and you have embraced the challenges of credit from a generational educational standpoint. I mean, you guys are great partners with the BMPA, the Black Mortgage Professional Alliance.
Yep.
And what you guys have understood is that within the minority communities, there is a disparity of wealth, disparity to information, and also a disparity to how to build credit. So you guys have been a great educational resource, and I really respect you guys and thank you guys for being a great resource to help our buyers. Now, let's get into the big change here, okay? And it involves a change to how mortgages, particularly, account for different types of scores. Now, before we get into this, Jesse, I know we want to get into what we're talking about, but it's important for us to set the foundation, okay? Because people don't understand this, because people will say, hey, my Credit Karma says one score. Major, you're a loan officer, you're telling me it's another score. And what people don't understand is that there are different algorithms when you talk, and different scores when you talk about, the mortgage process. Can you speak to those algorithms a little bit and the way that people use the scoring models?
Yeah. So this conversation and this situation is something that on a daily basis is discussed not only with the loan officer, but with clients, because of the confusion that's out there. I'll tell you that probably one of the most unfair questions to ask is, what is your credit score? Because with knowledge on credit, the first response you should have is, which one, right? Is it the automotive score that's built by FICO? Is it the bank score? Is it the credit card score that have multiple, right? Like, there's not just one credit score, because there's not just one scoring system, right?
Yeah.
And so
absolutely. It's kind of like when people call me and they said, hey, Major, what's your interest rate today? I'm like, whatever you want it to be. Are you talking about with a point, with 2 points? I don't know what loan program you're talking about. So I don't know. So this change to the mortgage industry is talking about the Vantage score and the ability to use the Vantage score. Now, and again, Jesse, I'm not the expert here. You are. Can you tell me why using the Vantage score for a mortgage and the ability to use the Vantage score for the mortgage could be such of a game changer for home buyers?
Absolutely. So I'll start with this. Most people, when we say Vantage credit score and they're listening to this video, they're going to go, I've never heard of that. I've heard of FICO, right? Like some people don't even say credit score, they say FICO score. But what's interesting about that is that most people that would say that, they also have already been exposed to the Vantage score, right? And so consumers today, if you're accessing a free credit monitoring or credit reporting service to see what's happening on your credit, most likely are seeing a Vantage credit score. It's the Vantage 3.0, right? So Credit Karma, Credit Wise, Credit Sesame, all of those companies, right? And a lot of times even like your banks, they give you access to one credit bureau, one credit score. All of that is built on the back end on a Vantage 3.0 score. Some of them is a FICO 8 score. But Vantage for consumers is something that's being accessed, from what I can see, more than a FICO score when you're doing it yourself. Okay.
Yes. And the interesting thing is that Vantage score is most of the time, I'd say 90% of the time. I know most statistics are made up at the time, but more often than not, that Vantage score is going to be higher
Correct.
than your FICO score, which the mortgage companies are usually using algorithm for FICO 235 or something like that. You correct me if I'm wrong on that, but that's
2, 4, and 5. Yep.
2, 4, and 5 are using that. So your Vantage scores, and this is why people will say my Credit Karma shows me this, but you're telling me my score is, my Credit Karma shows me 660. You're telling me I'm at 590. Major, something's wrong with you. Like, no, not really. I mean, debatable, but not really. So the Vantage score also counts, rental history, correct?
Yeah. So there's a couple major things that come into play when we're talking about Vantage versus, if we're talking Vantage versus the mortgage scoring model, the 2, 4, and 5. I mean, FICO's at 10 now, right? And so think about how old those scoring models are. There's a lot of things that aren't being taken into consideration just in general with the change that we've had in the last 15 or 20 years. On top of that, it's how they're being, like the weighting system, right? So the algorithm is based on different factors that have different levels of weighting. And it'll take, we could talk about it for a day, the details of the differences, but in a nutshell, they're weighting payment history to be more of an impact than the FICO scores, 41% compared to 35%. They are also handling, right, risk differently for things like collections or general collections versus medical collections, right? And so there's some specifics that are taking place that look a little different, to where it could just be very cut and dry. If you have a collection and it's been paid off, it doesn't matter. It's still on there. It's still hurting you, right? That's going to be different on the new scoring models. And so that is one thing that's majorly different is, there's a variance in the weighting of how things have been addressed and handled and reported. The second thing is that if you've been up on, say, we'll call it self-reporting, right? So Experian Boost is something that has had a high amount of investment in advertising, right? You see it everywhere, Super Bowl commercials and everything. Well, that's called self-reporting to your credit. And so you can sign up for that, and then you can submit your bills for your cell phone, your utilities. So again, those things in the FICO 2, 4, and 5 models, they have no impact, right?
And yeah. So to interrupt you there, self-reporting, when I'm doing a mortgage, anything that is self-reported, I omit it because it doesn't matter in the model. It doesn't matter in the, in the FICO 245, which again is what mortgage companies currently use. And the directive from the FHFA has been now mortgage companies can use the Vantage score. Yep.
Vantage.
They can use the Vantage score in order to do or give you pricing or interest rates or whatever on your mortgage. They can consider that in a mortgage. Now, I digress a little bit, Jesse, because, it's important for people to understand how mortgages actually work. Because, if somebody says, hey, why can't the mortgage companies do this before? Well, all mortgages, no matter, I'd say all qualified mortgages, conventional FHA, VA, USDA, all qualified mortgages are eventually sold on the secondary market as mortgage-backed securities. Okay, so if you say, hey, my mortgage company sold my mortgage, they didn't sell your mortgage. They sold the servicing rights to
Correct.
your mortgage, which is a whole different pot of money and a whole different big money ball game. Okay. However, even if you pay the same company for your mortgage payment, your actual mortgage is sold on the secondary market to Fannie Mae, Freddie Mac. Okay. Right. So if that mortgage company, let's call it Freedom Mortgage, if Freedom Mortgage closes a loan and it doesn't fit the guidelines of Fannie Mae, Freddie Mac, they cannot transfer that mortgage over. And in order for that mortgage to transfer over, it has to fit FICO 245. Correct. Okay, in order to do that. Now we're saying the FHFA is saying Fannie Mae and Freddie Mac can accept Vantage scores. And what you see as a consumer, could be closer to your score. And you have things that score considers, as Jesse is explaining, that is different or could give you a higher credit score. Does that make sense, Jesse, what I'm saying?
Absolutely. I think Perfect. That's a fantastic explanation of how, things happen on the back end in the mortgage space, right? It's like a lender showing up to say, all right, I'm passing this off to you, right? It showed up at the door. And they say, great, I love the loan. What's the FICO score? You say, I don't know. I got the Vantage score. 2 days ago, they'd say, turn around and come back when you have the FICO scores. Today, right? And I say that kind of like with a little bit of, hesitance because we're not exactly sure. Like we can get access to the scores, right? Like we will be soon, right? Can they go through the system? How do they get approved? Like we're kind of learning as we go here, right? And so, but it all will really unfold. I would imagine by the time this gets published, we'll know a lot more. But today, if you have a good Vantage score, they're going to say, cool, we'll accept that. We'll take that, right? And the benefit is that a couple things. One, some of the initiative that was taken to kind of just pull the Band-Aid off and let's stop waiting on, how do we figure out how to roll this out perfectly and let's just do this, is that, FICO has been the only player in the game. And so now Vantage Scoring Solutions, which is made up, it's actually a joint venture between Experian, TransUnion, and Equifax. They together have created this company that's been in business since 2006, and they have a Vantage 4.0 that's been approved by FHFA, and now it's been approved to actually go through and they'll accept. Fannie and Freddie are going to accept this as a loan, and one of the major reasons why yesterday the announcement was made and they're just saying let's just go with it is because they're working to create competition for mortgage loan officers, honestly, to have another alternative for credit scores, because with just having one, I mean, in America you don't see it, right? I mean, like the only thing that I knew up until yesterday that was like there's an incumbent and there's a monopoly to some extent was in credit scores. And in my, like not everywhere in America, but like you only have one option for your electric company, right? Like that's how it is in Iowa. I know in Texas there's spots that are different, but like really those are the only two things that I knew of. And yesterday they said, well, now you have two players in the game. And so that's where Vantage Scoring Solutions is now. Again, what you're seeing as a consumer today, right? You might not know it. You might call it your Credit Karma score, your Credit Sesame score. Those are Vantage 3.0 scores, okay? So that's from that same company. What we're rolling with now in the mortgage space is Vantage 4.0. So it's the newest version of their Vantage scoring models. It has been approved by FHFA for a few years now, but they've actually approved that you can use it and to qualify for a mortgage. So, and again, I'll go back to you had mentioned, 90% of the time we're seeing a higher score. I mean, there's a reason for that. One, I just think the grading. I use the reference of like, do you remember when you were in school and different classes had different grading scales, right? Like you had to hit a 94% to get an A, right? If you're at 93, you're A minus, right? Like some were more stringent than others, right?
Right.
I just so vividly remember that because I remember my algebra teacher, her grading scale was the hardest. And I'm like, why do we have to hit 94 just to get an A, right? When most classes, all I need is a 90%, right? It's the same idea, right? They're graded differently. And so I guess it's easy to say that right now, when we look at Vantage 4.0 versus FICO 2, 4, and 5, the grading scale for Vantage seems to be a little more lenient as it relates to the average American. Again, we're expecting an expansion of 40 million more people, right? I don't have a credit score today. Well, on this new model, it's 40 million more, and 10.1 million of those will be a credit score that's 620 plus. So, I mean, if there's any call to action on this, it's one that would be if you had a thin profile, right, and you're just not quite there from a credit score standpoint, and you're eager to be a homeowner, now's the time to get some details on what does Vantage 4.0 look like for you.
Yeah, and I think, let's talk about some other things we don't quite know yet. Again, we said this is breaking news, okay? And we're having this conversation like literally yesterday this news came out, okay?
Yeah.
And I'm getting tagged on people screenshotting, the tweet or whatever, because all of our government officials tweeting is we can't X is X.
Yeah, they call it now, right? I still call it being on X, right?
So social media is the way they get things out now, and people are tagging me like, hey, Major, is this true? Hey, Major, is this true? And what's the real impact? So the real impact is on a grand scale, as you're saying, Jesse, it is estimated that another 40 million buyers could be credit eligible to purchase a home based on switching from the old FICO system to the VantageScore, correct?
So I would go one step further, and I would say they will produce a score. So right now, if you have limited credit history or if you've had some challenges, when somebody pulls credit on you, you might not have a score at all, right? Like you might have enough, right, that's built into the dynamics of your particular credit history to produce a score. Today, 40 million of those people that couldn't produce a FICO score 2, 4, and 5 will be able to produce a score. Now, some of those might not be the best score, and it needs some work. But of that 40 million, they're saying 10.1 million are a 620 plus. And you can talk to this much better than I can, but when we start talking about 600, 620, 640 for our FHA buyers,
yeah,
we're okay. We got a lot of options there, right? And so
it could be the difference between you getting approved and not being approved. I mean, if that credit score goes from 603 to 638, that could be the gap you need between an approval and a non-approval for a home loan. But I want to tell you this. These are whenever we have things, and we had this, come out, crypto, changes to crypto being accepted for mortgages came out, last week or something like that. There's a lot of changes going on in the mortgage space. So changes to crypto being accepted, came out, and the challenge is, okay, FHFA makes this decision. Okay. The question then becomes, how do the individual lenders implement this change? Okay. So is the individual lender allowing you to use a VantageScore versus a FICO score? Okay. And I will say, this came out yesterday. I work with 140 different lenders. I'm a broker. So I work with 140 different lenders. Okay. None of them have yet to give out any guidance on VantageScore versus FICO. Let the dust settle. Okay. Before we jump in and say, hey, what am I VantageScore? Mr. Pulte said I could use my VantageScore. Yeah, you have to have the implementation of those things first. Okay. This is coming 30 to 60 days. We expect some guidance, but this is a good change for home buyers. There is nobody that I could think of in my mind. Okay. And reality is, Jesse, whenever there are political decisions that are made, there's a good side and a bad side. Okay. I can't think of any home buyer that's being hurt by this decision. Nobody is worse off for this.
I don't think so at all, except for if you're unaware, and then if you have in the past, right, which this happens, you've been managing a very tight budget, and you know the light bill, if I don't pay it, they're not going to shut me off. I'm going to pay a late payment charge, but it's not going to report negatively to my credit. Things like that are going to change in the future, right? So being aware of how this impact is going to change, maybe how you manage money, make payments in the future, is super, super important.
Are you implying that although it's not 30 days late, they may actually document that through the VantageScore? Is that what you're suggesting, or what are you saying, Jesse?
What I'm saying is that if you went 30 or 60 days late on your light bill, right, that's really just, for the most part in the past, is just something that you're going to manage directly with that relationship. They're not going to report you to your credit as late. Now, we do see utility bills that end up on credit in a negative way, but that's when they progress towards a collection, right?
Yes.
And
yes.
So you may have been able to go 45 days and not pay a bill and be carrying a past due balance and that not affect your credit. That will probably change in the future.
That's a very good, very, very, very good point. And we have to now be aware now of the VantageScore and the inputs into the VantageScore, like what
Correct.
Companies input into the VantageScore. That's going to be different. That's going to be, interesting. So, hey, what I'm going to do, what do we do to Jesse? Why don't we, we got the information out. Okay. What's the action item? Well, if you got turned down due to credit, okay, or something like that, I recommend you re-engage with your loan officer or give us a call, okay? Even if you said, hey, 3 months ago I got turned down, I'm just rented for a year, give us a call and tell us that situation. There's actually the likelihood that we actually put you in touch with Jesse. So even if you're just getting over the hump, or on that cusp, then we put some things in place that can help you when you're actually at the end of, at the end of that 12 months and you actually buy a home. Jesse, I'll tell you, the most frustrating thing I see people try to do is do credit restoration on their own. Okay.
Yeah.
Because, sometimes people are making decisions where they thought they were going to be able to do X, Y, and Z because they read online, if you do this, then this. The thing I hate most about the internet is everybody has an opinion and they think it's valid. So, you might make a bad decision, and I want them to be connected with people who actually guide them correctly, because I tell my kids all the time, the greatest decision you'll make in life is figuring out who to listen to.
Yeah, that's a powerful statement right there. And it's very true. And you say one of the things I hate about the internet is that everybody has their opinion and they think that they're right. What I say specifically about credit is that when you have somebody that's an influencer online and talks very like they're the credit guru, those people are more interested in likes, follows, and shares than they are sharing information that is factual.
Yes.
And unfortunately, we are drawn towards the quick fix, the trick, the hack, right? When we're talking about credit, but it's not, I understand why. It's because it's confusing, right?
Yeah.
Like, where do you go to have a good knowledge base on how this works? They didn't teach us in school, right? There's not really like a validated, source of information for credit. So you're drawn towards people that sound like they know what they're talking about. Sure. That's why we just ask people to stick close to us, right?
Yeah.
So that we can help navigate the truth.
And the thing I like about you guys is okay. Bottom line, okay, you're still going to have to pay your bills on time.
Yes.
Okay. So this is not, I can do everything I want to do and not pay people and let stuff go into collections and not take responsibility for my liabilities. And I'm still going to be okay because we're now doing Vantage and not doing like whatever. You still have to pay your bills on time. You still got to be responsible for there is no quick fix to you. Now, if you haven't paid anything in the last year, you have not even paid attention. So if you haven't done anything, you're still going to have a challenge. It's
Correct.
Still going to be the situation. This is just a different model that could help some people that are on the fringes qualify for a home faster.
Yeah, I think that's the biggest thing and the most exciting thing is to say, I have been responsible, but it hasn't been accounted for, right? And so now I think you talk about call to action. I think for anybody that hears this at the consumer level that is interested in purchasing a home, I would act on, and again, this is all brand new for us. So I don't even really have like my top 3 who I would use, but like I would go and I would research rental reporting options, right?
Yes.
Experian Boost definitely is one that's credible. We at My Credit Guy are going to have a solution here, I would say, before the end of the day on exactly how and who we're going to support, how we're going to facilitate that, right? But do your research. You can reach out to us too, because from now until when this gets published, we're going to know so much more. And that will be one of the answers that I feel confident in giving is how you should be working to get the documentation that you need, right? Because you're going to have to get those records, from your property management company. There's going to be a process on how you submit those to get that reflected on your credit. So get the ball rolling on that right now. I mean, there's a lot that we have to determine and understand about how we're going to work through all of this, but it should not hold people back from acting on some of the things they can to make sure they're in place and they're ready and prepared so that things move smoothly. I
would say if you're renting a place, you would want to check with that company and see if they do report or they have a system where they report your rental history, assuming you're making your payments on time.
Yep.
Where they report your rental history to the credit bureaus. And the other questions that we don't know in the implementation of this is the government going to require, rental companies to report through a certain system where it does report to the credit bureaus and stuff like that. There's a lot we don't know. So, Jesse, I think we need to put a flag in today, okay? And then we come back 90 days from today, and that will be in October 9th.
Yep.
Okay. We re-record and we find an update to where we are right now. But we want people to know now, big change is coming.
You bet. I agree. I think that's a great plan.
Awesome. Hey, Jesse, thanks for this. Thanks for taking the time out of your schedule. I know you got clients to get to and helping people restore their credit. I'm going to put Jesse's information at the end of this video. If you want to reach out to him directly, or if you want to send me a message, I can put you in touch with Jesse and to get some credit help. Just let me know. God bless you guys. See you next time on the next episode of Major Money Matters. Thanks again, Jesse.
Thank you.